please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There goes the bell. It's again, as the pre-market indicated, about 0.5% lower.
We are looking at a choppy market, and in that kind of market, it will be better to continue your SIPs.
Because of the very strong response and very positive response from the investors, we decided to go for 1,200 crores.
The vision on the one-year buy deposit has sort of narrowed the gap between our rate and the rates offered by some of the other banks.
By virtue of geography, by virtue of medical clinical talent, by virtue of the focus that we have on patients and quality healthcare, I think you absolutely establish a leadership position in the healthcare industry.
We're down again, full 60-odd points or so.
Was a bad day. Could have been worse, actually, considering that global cues were weak and there was expiry. The market's still holding that at Nifty level 10,100 and on the Sensex somewhere around the 33,000 mark. The mid-caps were a problem today, advanced decline of about 1:2.
Weak global cues and expiry date jitters play spoil sport on Dalal Street. Sensex drops below 33,000. In the March series, Sensex and Nifty have lost over 2% each.
Mid-caps underperform after yesterday's rally. The index ends the day over 1% in the red. Relcom falls 8%, while Adani Power closes 6% in the negative.
Fortis under pressure, reacting to deal contours with Manipal Hospitals. The stock ends over 13% in the red. Biocon, however, gains after European and Australian regulators approved the company's first biosimilar. Persistent Systems, on the other hand, tanks over 11% after the company issues a revenue decline warning.
No decision by the SEBI on trading ban on companies sent to the NCLT under the IBC process, but the market regulator has accepted 40 of the 80 recommendations made by the Kotak panel on corporate governance. It's also allowed exchanges to introduce co-location facilities on a shared basis.
Bond rally falters. An increase in bond yields leads to weak performance by public sector banks. The index, that is the PSU Bank Index, ends the day close to 2% in the red. Well, those were the top 5 headlines from the markets action today. Hello and welcome to Markets Today Talkback, the show where we tell you about all the 8 hours of trading, everything that happened in those 8 hours in just 5 headlines. I'm Lata Venkatesh with me, Prashant Nair. Hi, Prashant.
Lata, hi. Disappointing day again for bulls. It looked promising mid-session, but then no real relief. We ended pretty much close to the day's lowest points. We'll discuss that. We'll wrap up the day in 5 top stories of the day. Our guests will join us. Mayuresh Joshi is going to answer questions. Ashwini Gujral is going to look at charts and answer your questions which you send our way. Thanks very much, both of you, Mayuresh and Ashwini, for being with us. But before we start the question and answer session, let's just quickly wrap up the day's events as always. Lata.
Well, not much. We had global headwinds which were looking negative anyways, both Wall Street and the pain continuing in Asian trading as well. We had, of course, expiry pressures, but after the expiry period, we had even a further fall. So markets kind of grinding lower, and the pain point from the public sector banks continued. Bond yields rising only made it worse. But it's not just PSU banks. Even the people whom they have lent to, the big leveraged companies, you know, the Relcoms, the Adani Powers, the Bhushans, the big leveraged companies were also a very big pain point. So you know where the pain is in the economy, and that is getting reflected in the markets.
Well, you know, in terms of stocks, I want to wrap it up in 30 seconds, basically. The big losers, ICICI Bank, Reliance Industries, Bharti, Tata Steel, you know, Infosys, SBI, Tata Motors. I mean, actually very few places to really hide as far as the market goes. And, you know, these are the big losers. In terms of gainers, Wipro was higher, Tech Mahindra was okay, and then you had something like Coal India, which did okay. Fortis, I mean, we reported the deal first. It was, of course, the last day in the futures and options segment also. By close was down 13%. F&O losers, I think we mentioned some in the headlines. Arcom, Reliance Naval, Balrampur Chini, HCC, Canfin, Jet Airways. I mean, so a pretty long list there as well. Lata.
Okay. Well, let's first ask our guests what they made of the markets, especially ahead of the long weekend. Ashwini, well, the markets, the Nifty ground lower even after the expiry was over. Yesterday's lowest point pierced. What do we have in store next week?
See, while the markets came off given that some of the markets like Hang Seng were down 750, I think a 50-60 point move on the Nifty is not so bad.
Okay.
Now the point here is that the markets have had two trending down months. Once you have large, downsides happen, after a point in time you have a period where market moves sideways and it misleads people into thinking that all is well. So my sense is that we should have that sort of a month in April where you have lots of news flow, and sometimes the news flow will take us to 99.50, at other times to 10,050. But broadly consolidation, and only post that we should make a next move. So that way I'm expecting more of a sideways month than a big upside or downside.
I admire the way you're able to make the market look like a human being with the same guile and the same frailties. Just coming back to you with our viewer questions as well. Here's a word we got from Nilesh Shah, the managing director of Kotak Mahindra AMC, when he spoke to us earlier today. He's also looking at a choppy market ahead.
The stock markets are likely to be volatile. While the downside is protected by improving earnings and improving micros, the upside also looks kept based on political uncertainty, and we yesterday had announcement of Karnataka election dates, and there are also global developments which kind of weaken our macros. Oil is on the upswing, trade wars, whether it impacts us or not, but it's being negotiated upon. So we are looking at a choppy market, and in that kind of market it will be better to continue your SIPs. And if you want to invest some larger amount, then please come by a systematic transfer plan over next 12 months rather than lump sum investment.
Okay, so that is some top-down view coming in from Nilesh Shah there. We move on to the second story of the day, and that's mid-caps. Mid-caps underperformed in trade after yesterday's rally. The index closed over 1% in the red, down 200 points from yesterday's close. The fall was led by names like Vakrangi, Suzlon Energy, Reliance Communication, IDBI Bank, etc. Long list there, but we've got some questions.
Yes, Vijaya Raghavan has sent us a question on Vakrangi. She has 100 shares bought at 90 rupees a piece, has been holding the stock for 2.5 years, wants to know if she should continue holding. So what would you advise Vijaya, Mayuresh? I mean, I hope you're tracking Vakrangi.
Evening, Lata, I do. And again, I think what is happening probably with the stock in terms of regulatory developments or the internal developments per se, I think it's better and safe to probably look at better stocks at this point of time. So my sense is that if she can take some money off and probably look at a couple of stories which we find interesting at this point of time. So Blue Star within the larger consumption basket, where our expectations is a 20-25% top line growth, a 30% earnings growth, margins expected to improve in the unitary cooling solutions business, should augur well for the return ratios. Our own expectation is an EPS of around 22 odd rupees. The second stock again should aid earnings growth as well. So our own expectation again is a 16% top line, 26% bottom line growth. So I think book out of Vakrangi partially and probably look at both these stocks in a staggered way on declines.
Okay, we got another question. Dhaval Patel has 200 shares of Reliance Infrastructure and he's paid 570 rupees a share for them. He's been holding the stock for the past 3 months and wants to know if he should hold or sell. Reliance Infra, 200 shares at 570. Ashwini, what would you tell Dhaval?
Well, there are better stocks. While, Reliance Infra has been moving sideways between 400 and 600. But we all know, what happens with infrastructure in this country, and they get bogged down, cost overruns, etc., etc. Try to invest in simpler businesses like, Motherson, Titan, Jubilant. Those are things which will do well this year. I don't think, great capex stocks or, any of those big industrial stocks are likely to do very well or at least outperform.
That's a very, very fair point, especially when governments are in election mode. So anyway, he's sitting a little bit of loss, and Ashwini's advice is you don't want to compound that. Third headline of the day, the stocks that were in the news today, plenty of them, starting with Biocon, that stock gained. That's a very, very fair point, especially when governments are in election mode. So anyway, he's sitting a little bit of loss, and Ashwini's advice is you don't want to compound that. Third headline of the day, the stocks that were in the news today, plenty of them, starting with Biocon, that stock gained after European and Australian regulators approved the company's first biosimilar insulin, Glargine. Although the stock closed in the red with profit booking perhaps. The second stock that was in the news, Persistent Systems, tanked over 11% after the company issued a revenue decline warning for its IP business. And of course, the other big stock in the news was Fortis, has been for so long under pressure after it signed the deal with Manipal Hospitals. The key disappointment was that the swap ratio appeared to be in favor of Manipal, not Fortis shareholders. Okay, maybe you want to just listen to what Bhavdeep Singh, CEO of Fortis Health, had to say.
Please don't form a view yet. Let's have a discussion. Let's have a conversation. This is not a knee-jerk reaction. The idea of doing what we're doing today was not just, hey, let's do this. It wasn't just a very simple or a improperly thought out concept. This has been a deep, well thought out, a very provocative conversations that have taken place inside the organization with respect to Manipal, with respect to TPG, with respect to Fortis. And no one should think that there's an issue here with value. This is a fantastic step going forward for Manipal, Fortis, both of our organizations. We think this is a great investment. We think the return is going to be there. I think the market is reacting as market reacts. That's okay. That's okay, because I think once we explain the story, once we start to show the moving pieces around it and how this value proposition comes together, I'm absolutely sure that not only will the stock do well, not only will the return on shareholders be there, but actually more importantly, the creation of an institution, an opportunity to make a difference and creating huge value is what the outcome will be. But it takes time, and it's not about, what's the stock looking like at 11 a.m. That is generally not a good indicator. But I think it'll all correct itself, and I think it'll do quite well going forward.
Okay, so if you take the Fortis management at face value, I think we can proceed with the question which is up on the screen. We have Nihar Sahu, who's got a question on Fortis. He's got 351 shares of Fortis. He's bought them at 150 rupees. I mean, so he's basically losing money. He's been holding the stock for the last 3 months now, wants to know if he should hold or sell, and he has a medium-term time horizon. Mayuresh, any thoughts? Fortis?
So what transpired, and obviously the swap ratio did disappoint because investors who probably got into the stock a few months back did expect a lot more in terms of what can actually go through in contours of what was getting discussed on the street. The longer term benefits in terms of the hospital business getting demerged and again getting merged with Manipal and getting listed, I think the long term benefits would be there for Fortis Healthcare itself with liabilities still in it. Again, I think what kind of value accretion can probably happen over the next few months is a question mark that I probably carry. So my sense is that even though he is probably sitting on losses and he can get out of that, if he's probably looking at the same space, I think Apollo is the only probable plant that probably stays here. So expensive in valuations. I think the average revenue per operating bed and the other statistics, including the average length of stay and a constrained way of doing capex for adding new beds and utilization levels expected to improve, can augur well for earnings. So I think Apollo Hospitals on declines is something that you can probably look at.
Okay, well, actually you're choosing for your financial instruments, you're not choosing hospitals. So I guess he can go beyond that limited choice. Some more questions. This on Biocon. Karthik Ashokan has 1,000 shares of Biocon. He hasn't mentioned the price at which he brought them, but wants to know if he should hold, sell or buy more. Now, this is a very difficult question because we don't know your price, we don't know your time horizon. But okay, let us assume that you want advice for the next 3 or 6 months. What would you tell him, tell Ashokan, Ashwini?
See, the good news for him is that Biocon hasn't really corrected. It's just kind of moved sideways in this 550, 650 zone. And that is a real sign of strength in a market that's been coming down sharply. So as and when the market recovers, and if pharma index overall recovers, chances are he'll see probably levels closer to 750 to 800. So he's in the right stock. Just try to hold on and keep a stop say around 500, 520.
Okay.
Okay, so he's in the right stock, and I mean, it's not really corrected, so good news
Stay put.
to that degree. Stay put. We will take a very quick break. Ashwini and Mayuresh, stay with us. Our conversation with them in terms of Q&A continues in just a bit. Okay, welcome back. You're with us here on Markets Today Talkback. Mayuresh Joshi and Ashwini Gujral have been answering your questions. It's been a poor day for bulls once again. The Nifty closing pretty much at the low point of the day. We got through the three top stories of the day, and here's the fourth one. There was no decision by the SEBI board, and the meeting was today, on trading ban on companies which have been sent to NCLT. I mean, it was expected that there would be some decision in that regard, but there was none. But there were other decisions. The market regulators accepted 40 recommendations by the Kotak panel on corporate governance reforms. There were 18 total, 40 been accepted. It's allowed exchanges to introduce co-location facilities on a shared basis. SEBI has also reduced the additional expenses charged by mutual funds to 5 basis points compared to 20 basis points of AUM, which was what was earlier. Let's quickly listen in to the chairman at SEBI, Ajay Tyagi, on some of these major decisions.
To amend the regulatory provision permitting charges of additional expenses up to 20 basis point on daily net assets of mutual fund schemes. So this has been decided to be reduced to 5%. That is, 5 basis point, 0.5%. So this will reduce the cost of investing in mutual funds by the investors. The stocks currently in derivatives but failing to meet any of the enhanced criteria would be physically settled. Stocks currently in derivatives and meeting the enhanced criteria shall be cash settled for the time being. Physical settlement to be introduced in a phased and calibrated manner. Individual investors can freely take exposure in cash and derivative up to a computed exposure based on their disclosed income. For exposure beyond this, the intermediary to undertake rigorous due diligence and take appropriate documentation from the investor.
Okay, all those are, of course, for more traders to trade algos and stuff like that, but not specific stock related. But the final headline is the bond rally faltered today. Bond yields increased today, leading to weak performances by public sector banks. PSU Bank Index ended the day close to 2% in the red, led by State Bank of India, Bank of Baroda and Bank of India. Well, questions on that front. Prakash More has sent us this on Capital First. He has 50 shares. He bought them at 850 rupees a share. He's been holding them since a month only. Okay, he's a short-term investor. Should he hold or sell? Ashwini?
See, 850, I think this was a price in January.
Oh, so 3 months.
Near the all-time high. Yeah, near the high.
He's been holding it for 3 months.
It's the all-time high. Now, you know, it's become a bank recently, etc., etc. But the problem is that 850 will take a while in coming unless, he averages it out and then sits it out while, the merger, etc., starts to work out. So that way it's not easy, but he'll make his life easier because it's not going bust and it's a reasonable company, etc. If you average down here and whenever the rally starts and whenever things stabilize, then maybe he should look at 850, 900. By sitting here for 2 years and then getting back 850, I don't think that serves too much purpose.
Okay, well, let me ask a more open question to Mayuresh. NBFCs, what would be your pick of the pack?
So out of NBFCs, Lata, in the housing finance space, Divan Housing remains one of our top picks. They maintained NIMs around 3%. The asset quality has largely remained very, very stable with GNPA below 1%. And the loan growth, as per management estimates, is expected to remain very, very robust going ahead. So the leverage that can get created on the balance sheet can be quite substantial. Outside the housing finance universe, Chola Finance is something that I'll still continue to prefer. Again, very, very stable asset quality. GNPA is at 3.7%, net NPA is at 2.46%. You're seeing 18 to 20% AUM growth. the management confident of maintaining that going ahead. Vehicle finance, the loan against property, the mortgage business is doing well. And again, the large element in terms of return ratios improving seem to be very, very expansionary over the next few years. So even on a price to book parameter, it is looking quite reasonable. So any declines can be taken as a buying opportunity in both these NBFC stocks.
All right, Mayuresh and Ashwini, thank you very much, gentlemen, for your time. Appreciate it very much. It's a long weekend, so enjoy your holidays. We'll, of course, see you back on Monday. From Lata, me, everyone on the team here on Markets Today, thanks very much for watching.